talking now with the Chief Executive of Anglesey Mining, and that is Bill Hooley. Bill, thanks very much indeed for joining us today.
You're welcome.
Let's get the first thing out of the way, the relationship between Anglesey Mining and Labrador Iron Mines before we go any further.
Indeed. Labrador Iron Mines is a company that was spun out of Anglesey Mining in late 2007. We bought it in originally as a joint venture, developed the project, and then spun it out in an initial public offering in Toronto. At that point, Anglesey held 50% of Labrador Iron Mines. There's been a subsequent fundraising in Labrador earlier this year, and we've now been diluted to 41%. But we are the largest single shareholder in Labrador Iron Mines.
Okay, well, let's concentrate on Labrador for the moment. You've just signed a deal with the local First Nations. This is a fairly major obstacle out of the way, isn't
Perhaps
it?
I can correct you, we haven't actually signed a deal. We have reached an agreement with them regarding the lifting of a barricade that was preventing us accessing our mine site. This was very much a disagreement, shall we say, between them, this is the First Nations, and the Newfoundland Labrador government, and we facilitated the conversations between the two, and as a result of that the barricade was able to be lifted. We still do have to sign some agreements with these First Nations. There are 4 of them. We've already signed agreements with 2 of them, and there are 2 more to go.
Okay, but this should enable some major plans to go ahead for 2011.
Well, certainly the barricades have been lifted. This has enabled us to start building our process plant. We would have liked to have built this earlier in the summer. The barricades prevented that, but that is now in process. That will be completed by December this year. Unfortunately, that's the start of the winter at that point in time, and we won't be able to produce anything from December until the spring comes in about April next year.
So what production levels are you aiming for? What's the ramp up and the eventual target?
For next year, we're looking to produce around 2 million tonnes of product and pushing that to 3 million tonnes in 2012.
Okay. Where's it going? The nearest place is Europe, isn't it?
Europe is very much the logical market for us. It is the shortest shipping distance across the North Atlantic to Europe, either into Rotterdam or into the Black Sea ports. Our major competitors into that market are the Brazilians, and we certainly have a shipping advantage on them there. But China is such a major producer or requirer of iron ore that it's a market that we should be selling into as well. And I expect that we will be selling some iron ore into China, but the majority of it into Europe.
Okay, let's talk about pricing and sensitivity, especially with the new spot pricing versus the annual agreements. One research note says a 10% rise or fall in the price of iron ore would cause a 20% rise or fall in your profits. Do you agree with that?
Well, I think there has to be some multiple, of course, some multiplier in that. I don't think that's an unreasonable expectation, and I think you have to look at the price of iron ore against costs, and I think that's a reasonable sort of assumption that the higher the price, the greater our profit would go up.
Okay, let's talk also about the cash position at the end of June. This is again Labrador rather than Anglesey, 41 million Canadian dollars and no debt. What's the cash burn? Are you adequately funded for the moment?
Well, we still have to complete the construction of this plant, and we have to run through our working capital as we get our first production up next year. We believe that we're adequately funded to do all of that. So we will have built this plant and we will have got the first production entirely with equity and with no debt associated with it.
Okay, and at the same time, are you using any of your resources to increase, I use the word again, resources in terms of expanding what you've already got?
We are certainly continuing to do exploration, but importantly, late last year, we did spend $5 million and acquired a further 50 million tonnes of iron ore to increase our resources. And we will continue to look for other opportunities of that nature for iron ore in Canada.
Okay, back to the Anglesey price now. That share price jumped about 13% on the news of the agreements with the First Nations.
Sure.
But it's still well below the 40p earlier in the year. I mean, most chief executives will say they're undervalued, but I guess you would agree with that.
Well, of course, of course I would say that. The Anglesey share price does tend to mirror the Labrador share price, but in this particular instance, there's a very significant discount between the Anglesey price and the implied value of our holding in Labrador. At the moment, that is probably 40%. On that basis, I would certainly say we were undervalued. There is always going to be some discount, but we certainly think 40% is more than should be there.
Final question then, when do you make money for your shareholders?
Well, next year we should be producing a lot of money, a lot of cash indeed. We hope that will be profitable in Lim, and that should get reflected in the accounts of Anglesey.
Okay, Bill Hooley, thanks very much indeed for
joining us
today.